Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of January 19, 2015. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week was certainly not a good week for Maryland mortgage rates. They ended the week sharply lower. If you take a look at the bond chart on the screen, you can see the green candle there on Thursday. The bond actually rallied above that's tough ceiling resistance and hit the all-time record high for the last 2 years. It reached the high it hasn't seen since April 2013. And then Friday, the big red candle, huge sell-off in the bond market. Spiked interest rates higher. They went from anywhere from 1/4 to 0.5% higher in one day. And that's because the stock market, after 5 days of loss, had a big rally back when we saw the report from the consumer sentiment. So with that in mind, we're going to recommend locking your Maryland mortgage rate to start the week, because the short-term trend is mortgage bonds could still sell off. So lock in the rate you got right now. With the stock market rallying into the week, we see some more pullback in the bond. Now, the big report on Friday was consumer sentiment. Came out better than expected. It came out at 98.2, well above the 94 expected, and that was the best reading on consumer sentiment in 11 years. That rallied the stock market, pulled money out of the bond market. Then we saw a report last week on retail sales for December 2014. Now, that was surprisingly a bad report. We were expecting a good retail sales for December with the low price of oil, but retail sales actually dropped 0.9% from November. So low price of oil does not look like it's motivating consumers to spend yet. Then we saw two reports on inflation last week. The first one was on the inflation at the wholesale level. That was the Producer Price Index, the PPI. It dropped 0.3%. So there's really no inflation on the wholesale level. Then we saw a report on inflation at the consumer level, the Consumer Price Index, or the CPI for short. It fell 0.4%. And year over year, it's only 0.8%, down from 2.1% in May. So we've got almost no inflation. So that's going to keep mortgage rates pretty low for the rest of the year, because we don't see any inflation because we've got no wage growth in the economy. So that's good news for mortgage bonds. Then we saw weekly initial jobless claims come out on Thursday, and surprisingly they jumped higher by 19,000 claims, up to 316,000 claims for the week. That was only the second time in the last 17 weeks jobless claims spiked above 300,000. Now we'll have to see, is that a new trend, or was that just a one-time spike because of the holiday weeks there, people's claims moved over to the next week. So we'll keep an eye out on this week's weekly jobless claims. Then in the local news, the next first-time homebuyer seminar is Saturday, January 31st in Towson, Maryland at the Sheraton Baltimore North Hotel, right there on Delaney Road. Now you can register for that event. Give us a call in the office at 410-412-3319 or register online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.